All right, we are live. Welcome, everyone. We are here at Benzinga, and today is Thursday, March 12th, 2026. I am Gianni DePoce, and I'm really excited to talk to you today about the hottest sectors retail investors are watching right now. We're going to be talking a lot about AI and what comes next. Obviously, there's a lot going on in the world right now, geopolitically, markets on edge. Let's go ahead and take a look at what's going on in the market right now. The S&P 500 down just over 1%. We're pretty much trading near the lows of the day. Still a lot of uncertainty on the geopolitical front. But let's see, it's still pretty early. Got some key levels here that I'm watching. We've seen a pretty big flip in the tape. So far this week, we've seen some leadership from technology and some AI areas of the market. They're facing some heat today. So I think the timing of this conversation that we're going to be having together couldn't be better. The NASDAQ is off more than the S&P, down about 1.5%. You had a little bit of a spike about 15 minutes ago that was quickly faded. Looks like the NASDAQ might want some new lows on the day. But you even just look at the broader tech sector, down over 1.5% today. And obviously a market that a lot of people are watching right now is crude oil. We're going to tie that into AI today, especially when you consider the incredible power needs that AI needs to operate. And let's also talk about some opportunities that might be there in the energy space. So that's what's happening right now. A lot to discuss. Before we bring on our special guest, I do want you to take a look at this quick video from our friends over at Direxion. Check it out.
Precise, innovative, bold. As the financial landscape evolves, so must the tools to navigate it. Direxion, a trailblazer in specialized ETFs for non-traditional traders and investors, stands at the forefront of market adaptation. We are now one of the top 2 global providers of leveraged and inverse ETFs. These ETFs, favored by active traders and sophisticated investors, exemplify our commitment to innovation and market resilience. Our index-based ETFs offer ways for traders and investors to seek diversified opportunities and efficient access to directional strategies and non-correlated markets. With a robust lineup of more than 90 ETFs, including single-stock daily leveraged and inverse ETFs, alongside the popular Magnificent Seven, Direxion has been shaping the future of tactical investing since 1997. With over $50 billion in assets under management as of 2025, Direxion continues to lead with a diverse set of highly liquid long-term strategies and short-term trading tools. Our investment focus spans capturing index-based alternative returns and seizing directional market opportunities. We cater to financial advisors, institutions, active traders, and sophisticated investors worldwide, offering flexibility, innovation, and the expertise needed to navigate the ever-evolving financial landscape. Direxion, shaping the future of trading and investing. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about the Direxion shares. To obtain a fund's prospectus and summary prospectus, visit our website at direxion.com. A fund's prospectus and summary prospectus should be read carefully before investing.
All right, that was pretty helpful. So thank you, Direxion, for putting that together for us. Let's go ahead and bring Sean on here. Sean, what's going on, man? How you doing?
Hey, Gianni, good morning. And that video was awesome. Thanks guys for the intro. I appreciate it.
Yes. And, I know you have some more material to discuss with us, just to let us know a little bit more about the inner workings of some of these really cool funds that you have, thematic ETFs, adding on a little bit of leverage. And then once you take us through that, I'll walk through some of the opportunities that we're seeing. And right now, one of the beauties of, one of the beautiful things that you guys have is that no matter what the market is doing, there's going to be an opportunity somewhere. And so bullish, bearish, neutral, doesn't matter. There's a lot of things moving right now, a lot of moving parts. So let's go ahead and get into it.
No, for sure. And again, thank you, Gianni, for having me today. I like to say opportunity is everywhere, and we're seeing that in the markets right now. A lot of volatility, whether geopolitical issues or even just within what we're going to talk about today, which is technology and AI. So, a lot of great trading opportunities are around us. I'll take some time introducing the firm, but then also talking through some of the themes where you could potentially trade as well. So, I like to start off with our disclosure slide. We are the leverage and inverse ETF issuer. We are providing enhanced exposure to an index or single stock, and so there is added risk. So be sure to be mindful of that in this conversation. We're going to talk through some of those risks as well. So, just as a reintroduction, Direction, we are a ETF issuer. Over 100 ETFs that we have within our lineup. If you look at this slide here, it's just showing the growth of our assets over time since 2008. And as the video, communicated to us, we are the innovator, one of the innovators within the leveraged and inverse ETF space. As I mentioned, we provide that enhanced exposure to indices, sectors, and we'll also talk about single stocks. So that exposure goes up to as high as 3x daily exposure, or you can have, bull and bear inverse exposure up to 3x as well. And again, as the video already communicated, we are probably we are a top 20 ETF issuer in terms of AUM. We have around 55 billion in assets under management as of today. But if you're looking at the chart, you're just seeing a tremendous growth in our assets, in the number of funds as well. We have offices not only in the US, but also in Hong Kong and Japan. So just to really introduce leverage and inverse ETFs for those who are unfamiliar, leverage and inverse ETFs provide traders who are traders with enhanced exposure to an underlying index or single stock, as I mentioned a little bit earlier. So if you're a trader and you're looking to magnify the returns of a benchmark index or a concentrated sector or a single stock on a daily basis, you can look at utilizing leverage and inverse ETFs. You may already be trading options, or you may already be using margin to get enhanced exposure. But within the leveraged ETF wrapper, it's a more efficient way to get that additional exposure to the underlying movement that you're looking for. So the way that it will work is effectively a dollar that you invest can get you $2 worth of exposure in a leverage ETF, or the dollar that you invest can get you $3 worth of exposure, just simply if you're in a 2x fund or a 3x fund. So that's the way it works. And we typically provide that exposure through the use of swaps, and then also the ETF that tracks the underlying index, or a basket of stock that replicates the index. Just wanted to start here. That's some of the basics. Happy to take questions as well as we go throughout the presentation today, Gianni, but wanted to introduce leverage and inverse ETFs here. On the next few slides, I'm just going to talk through some of the risks that are inherent when you're trading leverage and inverse ETFs, simply because, again, you're having enhanced exposure. So that means there's more reward. So with more reward, there's added risk. And when you're trading leverage and inverse ETFs, it's important to understand the risk of trading leverage and inverse ETFs. You'll hear me say throughout the presentation that if you're going to trade our funds, you have to be mindful that they have a daily investment objective, like this slide is showing. If you are in a 2x bull fund or bear fund, it's designed to give you that 2x performance just for a single day. So not for periods longer than a day, and we'll talk through some of the mechanics there. So I would say for those who are tuned in today, this is probably one of the most important slides to reference or to save or to screenshot. And I say that because this explains the power and the impact of compounding. Compounding can work for or against you. And I'm just going to take some time to really go through compounding and how that could impact your investment if you're holding a leveraged or inverse ETF for periods longer than a day. So I'm just going to slow down just a bit just to make sure that this is communicated clearly. So this is a hypothetical example of trading a 3x bull ETF. So again, these funds are designed to give you enhanced exposure on a daily basis, whether it's 3x or 2x, exposure on a daily basis. If you look at the very top row, it's just communicating that, hey, this is a hypothetical example of compounding just in one day. So let's just say we're investing $100 into a 3x bull fund. We can use that SPX, so the S&P 500. Let's just say we invest $100 into that fund. If you want to use the direction fund, it will be SPXL. That's a 3x bull ETF on the performance of the S&P 500. So if we invest $100 into SPXL and the underlying index moves 5% or rises 5%, on that first day, your total exposure would be 15%. So you'll have a 15% gain on that first day's performance because that S&P 500, that index increased 5% because we're in a 3x bull ETF. Our total exposure there is 15, 5 times 3. So that's a great day. Your ending day assets would be $115. So your total return on the day is 15%. So again, a great trade. The index increased 5%. But let's just move down to the second row. And let's just say you held SPXL through 2 days. But on the second day, instead of the index rising 5%, the index falls. So I'm sorry, instead of the index being flat, the index rises 5%. So you started the day at 115. The index moves 5%. So your total exposure there is 15. 5 times 3 is 15%. That 15% is compounded on your original balance from day 2 that you started with. So that's 115. So 15% times 115. That gets your ending day balance at $132.25. So your cumulative return only after 2 days is 32.25%. So again, you would look at that and you would say, this is a great trading vehicle, great trade. You feel like you could trade leverage all the time. But let's just give the alternative scenario. Instead of on day 2, the index rising 5%, the index falls 5%. So we're just going to take a step back. So again, we end day 1 at 115. We begin day 2 at 115, but instead of the index rising, it falls 5%. So again, that exposure there is going to be 15. That 15% is compounding on your beginning day's assets of 115. So you end the day at $97.75. So you're seeing the power of compounding here. So after 2 days, in the first scenario, we see that, we have a return of 32.25%. But in this second scenario, we see that our return, the cumulative days return overall, we're negative. Only after 2 days, we're below our original investment of $100. And I just want to communicate here that you see that with compounding, you can't just use simple math of, hey, the index rose 5%, so that 15% becomes $15 on 100, so you're at 115. But then the second day, when you have that same movement, but to the downside, that 15% is compounded. And so you can be below your original day's balance only after 2 days of this sort of volatility. And so again, really important slide to understand that if you're going to trade leverage and inverse ETFs, you have to monitor your trades daily, in some cases intraday, because compounding can work for or against you. And we'll see that in the next slide. So in this slide, it's just showing a hypothetical example of allocating to a 3x bull ETF in a trending bull market. And I say trending because if you look at this chart, you'll see that the benchmark's return over that time, that orange line that you see there in the middle, it's up. So it's not a lot of volatility there. It's heading up. And so you see the benchmark's return after a week is 11.4%. If you're in a 3x bull fund, some may say, hey, if I do the basic math, 11.4 times 3, my return should be 34.2. But you see the mahogany 3x bull ETF line listed above the orange benchmark line, you see the return is 37.3%. You may say, hey, Sean, why is that? You just said, hey, compounding can work for or against you. You have some volatility there. The reason that this is the case is because if you're in a trending bull market, that compounding is additive, which we saw in the previous slide. So you see that the 3x bull's return is 37.3%. So you're seeing that compounding is working for you in this scenario because you're in a trending bull market. The slide is clear into the upside. And you can say the same if, let's say, hypothetically, you invested in a 3x bear ETF during that time. Again, the benchmark's return is 11.4. You would think that if you had static exposure there to that fund, that if you were in a 3x bear ETF, then your loss in this case would be 34.2%. But you see that it's only 28.7%. So in this case, again, compounding working for you, even if your investment hypothesis was wrong because the trend was clear into the upside. So again, I'm communicating this to say these funds have a daily investment objective, but there are periods when the trend can work in your favor, but you have to be mindful that that's not always the case where you have a scenario like this. And in the next slide, I'm going to explain what could potentially happen. So the previous slide, we went through a trending bull market. This slide is showing, again, a hypothetical example, holding a 3x bull ETF over a period of a week, and the benchmark's return is 2.4%, so you're up, but you see the performance or the pattern to get to 2.4%. It experienced volatility. It's not a clear trend to the upside or the downside, but you are up. However, if you look at the benchmark's cumulative return, if you were in a 3x product, you would think that 2.4 multiplied by 3 would get you 7.2%. But if you look at the mahogany line once again, you see that the 3x bull ETF's return is just 6.3%. And that's again because of compounding. Compounding in this case is working against you because the trend is not clear. And in the same way, you see the 3x bear ETFs, the performance, again, a non-trending, non-directional market, you're down 8.6% and not 7.2. So again, communicating, compounding can work for or against you. So when you're trading leverage and inverse ETFs, you have to be mindful of the underlying trend. Gianni, we've spoken before, and I've heard you say the term, the trend is your friend.
Oh, yeah.
When we're trading leverage and inverse ETFs, it's very important to understand that the trend is your friend. If you fight the trend, you may not be in a trading position that's advantageous for you. So again, our funds have daily investment objectives. They're designed to be used tactically. We're going to talk through some trading opportunities, as I mentioned at the top of this presentation, that are going to present themselves around AI and other areas of the market. But prior to trading any of our funds, you have to understand that these tools are powerful tools. They can work for or against you depending on the underlying trend. In the next few slides, I'll begin to talk through a few ways that you can utilize our ETFs. So again, our ETFs are similar to options or margin where you're looking for enhanced exposure to an underlying index or individual stock, right? And so we know that if we're going to trade leverage and inverse ETFs, we have to be tactical. We have to have high conviction if we're going to trade a market or express a sector view. That could be around earnings or larger macro events, which we are seeing in the market presently. Leverage and inverse ETFs can be used to hedge. So as I mentioned before, the exposure ranges. It could go from inverse 1x to inverse 3x. So if there's a sector or individual stock or an area of the market that you're looking at that you want to hedge, you can look to use leverage and inverse ETFs. As I mentioned before, there's some capital efficiency as well. $1 invested in a leverage ETF, it's amplified. So you can have $2 worth of exposure or $3 worth of exposure to or for your trade. Then also, when you're trading leverage and inverse ETFs, you are looking to trade short-term strategic opportunities in the market. So you want to be nimble. You want to pay attention to the markets. You want to monitor your trades daily and in some cases intraday, depending on the volatility that's present in the market. And now the introduction to artificial intelligence. I think we all see that AI is dominating headlines, and rightly so. We saw Palantir CEO Alex Karp come out today on CNBC and talk through just their dedication to AI and the impact that it's going to have around the world. So artificial intelligence, it's definitely here to stay. A few notes on artificial intelligence before I begin to just highlight some trading opportunities around artificial intelligence. What we're seeing in regards to artificial intelligence and mainly infrastructure spending, we're seeing that hyperscalers, they're expected to spend $300 billion annually on AI infrastructure. The semiconductor market is projected to approach $1 trillion over the next decade. And then AI compute demand, so that's your raw hardware like CPUs and GPUs, it's expected to double roughly every 6 to 12 months. So we are still in the early innings of the AI infrastructure build out, and that's going to present some trading opportunities around AI. And because of that, I wanted to introduce the Direxion Daily AI and Big Data 2X Bull and Bear ETFs. Again, hyperscalers like Microsoft, Amazon, Meta, and Alphabet, they're dramatically increasing their AI infrastructure spending. What you'll see on this chart is to the right, the index top 10 holdings for the AI and big data index. You see those hyperscaler names like Microsoft, Amazon, Meta, and Alphabet. So if you want exposure to some of those names, you can look at this particular bull and bear ETF. So if you are bullish, the themes around AI infrastructure spending and hyperscalers, you can look at trading AIBU. So again, that's the 2X bull ETF on the AI and big data index. If you're bearish and you want to trade the short-term price movements of that index, you can look at trading ticker symbol AIBD. So that's the inverse ETF on that index. So again, if you look to the right of this slide, you'll see, the index top 10 holdings. So as I mentioned, you have Palantir, you have Alphabet, Meta, Microsoft, Broadcom, NVIDIA, Apple, Amazon. So again, this index is going to give you exposure to companies that are heavily spending on AI and infrastructure. So those hyperscalers that we mentioned, and some of the largest technology players within the market currently. And then the next slide, this is an index-based trading opportunity around AI. The next slide, I'm going to introduce single stock leverage and inverse ETFs. I think we're familiar with some of these individual names here in that basket form in an index, but there are also some opportunities if you want to trade those individual names. And just to take a brief step back before I introduce those ticker symbols, just wanted to provide a little perspective around fund flows around single stock ETFs and what we're seeing. So single stock leverage and inverse ETFs, they continue to grow rapidly. We have over 29 pairs that provide, again, targeted exposure, 2X exposure to the bull side and inverse 2X exposure to the bear side. And in some cases, for some of our funds, inverse 1X exposure to individual single stocks. And something that I wanted to share with the traders out there and you, Gianni, is that last year we saw a tremendous number of leverage and inverse single stock ETFs launch. 20% of the ETFs launched in 2025 were single stock leveraged ETFs. Direxion as a firm, we launched 25. So right now there's over 200 leverage and inverse single stock ETFs in the market. So again, it covers a broad range of mega caps, then also even smaller caps, high volatility names, and even some smaller companies as well. So broad market usage in terms of the leverage and inverse single stock ETF exposure. We're continuing to see just rising usage within leverage and inverse single stock ETFs. As I mentioned, you have traders that are looking to trade around those macro themes, or you have traders that are looking to trade around earnings. Maybe they're looking to hedge positions that they may have in those individual names. So a tremendous amount of trading activity. Leverage and inverse ETFs make up roughly 13% of the daily trading volume of ETFs, despite only representing about 1% of the total AUM of ETFs. So that just shows the tremendous amount of trading volume that leverage and inverse ETFs have currently. So again, 13% of the daily trading volume of ETFs, while representing only about 1% of the total AUM of ETFs. And to talk through our franchise a little bit, our broad franchise grew from 6 billion in assets at the end of 2024 to over 11 billion in assets at the end of 2025. So tremendous growth in our leverage and inverse single stock ETFs. And I'm just speaking about our leverage and inverse single stock ETFs. Names like Tesla, Alphabet, NVIDIA, Meta, Micron, and Palantir, all in excess of 500 million in assets under management. And a few of those funds like Tesla and Alphabet, and even Palantir, grew to $1 billion in assets under management. And I'm communicating this just to convey that traders are increasingly using leverage and inverse single stock ETFs to tactically trade, whether it's to buy dips or to hedge. As I mentioned before, we're seeing a tremendous amount of flows within our leverage and inverse single stock ETFs. And I'll introduce our lineup of funds in the next few slides. So I'm going to break this up just a little bit, just because on the next few slides, I'm going to highlight all of our leverage and inverse single stock ETFs. So if you're looking at our slides, you'll see on the left-hand side, it lists the name of the individual company. We have on the right-hand side, you'll have the bull. So if you look at the leverage single stock ticker and it says 2X, that lists our funds that will give you that bull exposure to the daily performance of the underlying. And then in the far right column, you'll see the inverse single stock ticker. So in some cases, it's 1X. In some cases, it's 2X. And so in the next few slides, just take some time to look through the holdings. I won't cover them all. I'll continue to focus on AI in the next few slides, but I just wanted to highlight here, we have a broad product suite. But back to the AI infrastructure build out. And as I mentioned previously, artificial intelligence is driving one of the largest tech infrastructure cycles we've seen in decades. The hyperscalers, as I mentioned previously, they're dramatically increasing capital expenditures to build AI infrastructure. So that includes data centers, GPUs, and cloud computing capacity. And so this investment cycle is creating strong demand across the AI ecosystem, particularly for cloud infrastructure and enterprise platforms. So there are some trading opportunities if you want to trade those themes around AI infrastructure. So if you think companies like Microsoft, Amazon, Meta, Alphabet, and Oracle, those are hyperscalers that are driving massive investment across the tech sector. And so I want to highlight those individual companies because we have exposure to those companies. So if you're looking to trade the short-term price movements of those individual names, so those hyperscalers, you can look at trading MSFU, which is the 2X Bull ETF on Microsoft, or MSFD, which is the bear, or AMZU, which gives you 2X exposure to the bull side, or MSFD, or even Meta, we have the 2X Bull, or METD, and then Alphabet, and then also Oracle. We're providing you opportunity to trade around those themes that you're seeing within those individual names. So again, if you're looking to trade themes around the AI infrastructure build out, we have a host of ETFs. On the next slide, you'll see additional opportunities as well. So in this slide, again, showing you some additional opportunities. So you see names like Meta and Microsoft, even Micron, Lockheed Martin, if you're paying attention to what's taking place geopolitically. See Google, Eli Lilly, Ford. So again, just pivoting just a little bit, just to show that there are additional opportunities outside the AI trade. There are some other sectors of the market if you're looking to trade our leverage and inverse single stock ETFs. But back to the AI. So if you're looking to trade AI semiconductors, we have a broad suite of semiconductor-related leverage and inverse single stock ETFs. So we all know semiconductors, they're at the core of the AI ecosystem and compute power. So as AI models become larger and more complex, the demand for high-performance GPUs and AI accelerators continues to grow rapidly. So this creates powerful semiconductor cycle where chip designers are competing to deliver the next generation of AI compute. So if you're looking to trade those catalysts, so these are semiconductors, so names like NVIDIA, which I mentioned before, or AMD and Broadcom, Qualcomm, Taiwan Semiconductor, or ASML, you can look at trading within our lineup of leverage and inverse single stock ETFs. And again, I know this slide isn't all encompassing of all of our funds. You can go to our website at Direxion.com to view our full list. For the sake of the presentation and Gianni's time, I won't go through everything. And on the next few slides, I'll introduce some additional trading opportunities as well. So again, these are leverage and inverse single stocks. If you're looking to trade semiconductors, we have a robust suite of some of the semiconductor leaders that you could trade. And then lastly, I just wanted to touch on the AI infrastructure and enterprise adoption. So enterprise adoption, so those are, the companies that have cloud computing infrastructure. So there's some opportunities there as well. And so AI has moved beyond just model development into real world development. So enterprises are looking to implement AI within, their daily day-to-day workflow. And so those companies that are looking to integrate AI into their software and analytics and automation and cybersecurity, we have some opportunities to trade around that as well. So names like Cisco, Marvell, Micron, Palantir, which is in the news today, Palo Alto, those are companies that you can trade as well that are looking to integrate AI into their companies overall. So a lot I've covered so far, a lot of tickers, but what you see is AI is just not a single company. It's broad. It crosses the entire tech ecosystem, which spans semiconductors, infrastructure, and then enterprise software. And just to pivot as well, so far we've covered AI and trading opportunities from an index exposure standpoint with AIBU and AIBD. We've covered our leverage and inverse single stock ETFs that you can trade if you're looking to trade the themes around the AI ecosystem. And now I want to introduce our Titans lineup. And so our Titans lineup provides concentrated exposure to the top companies shaping respective sectors. So on this slide, it's a pyramid, but just to really simplify it, you see at the point of the pyramid shows single stock. In the middle of the pyramid, it's the Titans, so the top 5. And at the bottom of the pyramid is your broad sector. So that's your, if you want index exposure, broad sector, you may have hundreds of companies within an index. And we know with the single stock, you just have single stock exposure. But with the Titans, it gives you exposure to the top 5 companies within a respective sector. And it's an equal weighted approach. And so if you want exposure to the AI themes, you can continue to look at our Titans ETF if you just want concentrated equal weighted top 5 exposure as well. And I'll introduce that on the next slide. So as I mentioned previously, we have the index exposure, we have the single stock exposure, but now we have a concentrated basket exposure. So the top 5 names, equal weighted. If you want exposure within the AI theme or trade, you can look at trading the technology Titans. So that ticker symbol is TTXU. That's a 2X bull ETF or TTXD. That's the bear. And you see on this slide, it's showing you that you have exposure to Apple, NVIDIA, Microsoft, Broadcom, and Oracle. So again, those are companies that are central to the AI and cloud infrastructure theme. And then also semiconductors. Semiconductors have led headlines. They've driven market returns, and I think they'll continue to with the amount of CapEx spending that's going to go into AI. So if you're looking to trade and target the core AI chip supply chain, you could look at trading TSXU, which is the 2X bull ETF on the Titans semiconductor top 5. And so those names you'll see listed on the right. So ASML Holdings, Taiwan Semiconductors, NVIDIA, AMD, and then Broadcom. Beyond technology, you'll see we have biotech and energy. Energy is driving markets right now. So if you're looking to trade headlines around what's taking place globally, you can look at trading TEXU. So that's the 2X bull ETF on the Direxion Daily Energy Titans bull ETF. So takeaways so far, we have a tremendous amount of ways that you can trade around themes, macro level events, or ideas that you may have. As I mentioned, we have a robust suite of leveraged and inverse ETFs. But if you are looking to trade around the AI themes that are present today, we've went through quite a few tickers, you have quite a few opportunities. So trading opportunity is everywhere, as I like to say. Always remember that if you're going to trade leverage and inverse ETFs, these are tactical short-term trading tools. So as I referenced in the previous slides, make sure you monitor your trades daily, in some cases intraday, depending on the volatility that takes place in the market. We only have so much time. So be sure to go to our website, direxion.com, go to our education center, and make sure you are comfortable prior to trading. Make sure you understand the risk of compounding and the way that our leverage and inverse ETFs can be additive to your trading. And at this point, Johnny, I'll pass it over to you.
Okay, great. Thank you for that, Sean. And I really love those Titan ETFs. Great way to make those types of thematic bets. So now what I'd like to do is just take you through some of these direction funds from a trader's standpoint, just where I see a lot of activity taking place, where there might be some pockets of opportunity. So let's go ahead and get started on that. I'm going to take you through a few pretty simple techniques that you can start using today. Because one of the things that the main reason I learned how to trade, the main way I learned how to trade is through charts. So in today's day and age, you don't have to go to Chicago or New York to go into the pits and do like the calling out of the trades. You can do these types of trades, find these opportunities by looking at charts. So let's start off with semiconductors. We're talking a lot about artificial intelligence. Sean mentioned it a little bit earlier, but I'll say it again because this really is the crux of finding which side of the market to make a bet on. The trend is your friend. Okay, so what is a trend? Well, you have uptrends, you have downtrends, and then sometimes you have markets with no trend. Those ones, with the way I trade, I think they're best to avoid, and especially when you are looking at some of these funds that are, either bullish or bearish. You want to avoid those markets that are trading sideways or exhibiting choppy price action. So let's take a look here at the semiconductor index. Okay, this is not something that you can trade outright. Direxion has, bull and bear funds. We'll look at that in just a moment. But let's talk about the trend that is in effect here, because it's to the upside, right? And why is it to the upside? Because you see higher highs and higher lows. Follow my laser here. Each subsequent high is above the previous high, and each subsequent low is above the previous low. Okay, so now you had something pretty interesting happen recently, because the low that we had this month did take out that low in February. So the bears are alive. They're not down for the count. But bigger picture, the bulls are still in control. And another thing I need you to understand is that trends exist across different time frames. You can have a long-term uptrend, an intermediate-term uptrend, but also a short-term downtrend. And so you need to keep all of that in the back of your mind and understand, hey, if I'm taking a short-term directional bet on a market that is long-term bullish or intermediate-term bullish, I'm going to have to stay nimble and be ready to get out at a moment's notice, especially if my trade target has been achieved. So let's take a look here at the bullish side of semiconductors. So you can see how this translates very nicely over onto this SOXL, the 3X bull side semiconductor ETF that Direxion offers. You see the trend here, higher highs and higher lows. And so, you would, in most cases, look to the SOXL, the bull side. Now, what I have here is something called support, okay? So support is simply a range or a zone on a chart where there's been previous price action, and it's an area where there is more demand than supply. So I need you to put on your economics hat for a moment here, because when there's more demand than supply, prices stop going down and they start going up. Okay, and that's exactly what we saw here earlier this week. Prices fell into support. There was actually some support here back in February, but you can see how there was some price action, in this range, back in October, back in December, and even into a little bit in January. So you can use your eyes, use your eyeballs for this. And we bounced right off that zone. So was this a higher low with respect to the long-term trend? Sure. But like I said, you took out this low from February. The bears have something to work with here. And so let's take a look at the bearish side of semiconductors here. So what is a downtrend? Well, you can see it here in the inverse semiconductor triple leverage ETF, lower lows and lower highs. Okay. Each following low is below the previous low, and each following high is below the previous high. Okay, but what do you have here in SOXS? Pretty much the inverse of what you saw in SOXL. You took out that high from February. Okay, so bears have something to work with here. You can see the resistance zone, okay, which is simply the opposite of support. Resistance is simply an area on a chart where there's more supply than demand. When there's more supply than demand, prices stop going up or they drop. And you can see how it was rejected here just a couple of days ago. But if we're forming a higher low now in the bearish semiconductor ETF, then you could see this resistance break. And if resistance breaks, when resistance breaks, it becomes support. The inverse is also true for support. When support breaks, it becomes resistance. So, we're at a big moment here in semiconductors. Obviously the geopolitical environment creating a lot of tension in the growth trade and the semiconductor trade and the AI trade. And I'm going to touch on that in just a moment, but let's go ahead and move on to another market that's been capturing a lot of attention that is tied into what's been going on geopolitically and in the energy market. It's emerging markets. So we have the MSCI Emerging Markets Index up here on screen. You can see that, since last summer, it's been a pretty clean uptrend, higher highs and higher lows. You had that resistance zone that we broke above at the start of this year. It became support, and it's been where the hot money has been. Okay. You look at markets like Korea, you look at some European markets. I mean, we're talking about markets that went up, 30, 40% in a matter of months. The Korean market was up, I think, triple digits in 2025. So a lot of opportunities outside of the US as well. Typically, emerging markets tend to do better when commodity prices are rising, when the dollar is weaker. And we've had those types of environments over the last several months, even though, in the last month or so, the dollar has made a pretty impressive comeback. So it's no surprise to see some of the selling pressure here in emerging markets. But look at where we bounced. Okay, that was a resistance zone. We bounced. And, that could be a higher low in terms of the longer term trend, but you did take out those lows from early February. So now even the emerging market trade is under pressure. So you can see here EDC, the 3X emerging market bull ETF, you bounced off support right there as well. But the trend has been very clearly to the upside. Okay, so we're going to see how this situation settles down. If we get a resolution of the conflict sooner than later, I think emerging markets will continue to provide an opportunity worth paying attention to, especially if the dollar starts to pull back. Remember, they like higher commodity prices. These are a lot of economies and markets that are dependent on commodity exports. So when commodity prices are higher, these countries, these stock markets, these companies, they make more money. Now, if we're going to see a return to some of the themes that we've seen in, past decades, or, US markets outperforming, or even if we just see more volatility in the next few weeks, okay, you have an opportunity to capitalize on downside in emerging markets through EDZ, which is the 3X Bear Emerging Market ETF. But you can see how it's been in a downtrend, unsurprisingly, right? Emerging markets have been hot. You're going to expect the 3X Bear ETF to get hammered. Well, you had a nice rally here over the last few weeks, and I'm watching a pattern here. We call this a broadening bottom. Okay, and the thing with patterns is that it's really important that you don't act before they're confirmed, because sometimes it can be a fake out, right? And so what would it take to confirm this pattern? Well, you would have to break above this upper horizontal trend line here. It does act as a form of technical resistance, which we just discussed. But I didn't put those resistance lines on here because I wanted you to focus on the pattern at hand. So, there is a pathway for, more bearishness in stocks, not just in the US, but around the world. But it doesn't really matter when you have these types of funds to capitalize on, whatever direction the market is following. So definitely keep an eye on emerging markets. And, let's also talk about treasuries, because that ties into the geopolitical situation as well and what's going on in commodity markets. Typically, bonds don't like war, at least at the beginning, especially when central banks like the Fed are not helping out just yet. And in fact, we've seen rate cut odds really tumble for 2026 right now. As it stands, we'll be lucky to get one rate cut at this point. But what we're looking at here are long-term treasuries. It's important to understand that when we're talking about the Fed raising or lowering rates, they're not doing it on long-term treasuries. They're not doing it in long-term interest rates. They're doing it in the short term, okay? But the truth is it's all connected. And what we're seeing here is a sharp sell-off, okay? So you had a little bit of a flight to safety play out, but then they've gotten hammered because crude oil prices have gone up. When crude oil prices go up, it puts pressure on inflation. When inflation goes up, interest rates go up. It's not a good environment for bonds. But look at here, okay? You're on technical support. Let's see if this holds. If you form a higher low above these lows from January and February, perhaps we do see, at least a temporary resolution from the conflict. So keep an eye on bonds here. You don't have to trade stocks. You don't have to trade commodities. You're basically trading interest rates and inflation expectations, but be aware of the geopolitical factors at hand here. And so if you do want to look for more downside in bond markets, check out this ETF, TMV, 3X bear side of long-term treasuries. You can see how we're right on that resistance zone, okay? And you take out these highs in TMV from January and February, this thing will probably rip higher. In fact, you actually have a price pattern that is providing a pathway for such a move. This is called a rounding bottom, okay? But again, I urge you, don't act prematurely. You can't try to front run these types of patterns because it is not confirmed until you break above this resistance zone. So, 38, 39, this is the key level here in TMV. You break above that, guys, we're probably dealing with, an escalation, higher oil prices, a prolonged conflict. Bonds aren't going to like that at first, especially if the Fed is just going to be standing by and doing nothing. So that's how I see bonds right now. Definitely an interesting position. Let's take a look at another commodity market that has been captivating traders and investors alike over the last several months and really since the beginning of 2025. Gold and silver, just absolutely incredible runs to the upside. Bull markets, new all-time highs. Silver just absolutely going crazy. But I'm going to let you in on a little secret here that a lot of traders like myself are privy to. You can actually make more money buying mining stocks versus the price or buying bullion or actual physical gold and silver in true bull markets. When you're in a bear market, yes, the price of bullion does tend to hold its value a bit more. But when we're making higher highs and higher lows and you see nice trends to the upside, there is more value to be had in owning shares of mining companies, not to mention liquidity factors and things like that. So here is the gold mining index, higher highs and higher lows, clean up trend. Looks like we're actually forming now what's known to be an ascending triangle pattern, okay? And ascending triangle patterns are characterized by an upper horizontal trend line acting as resistance. You can see here around 300, and then an upward sloping downward trend line that basically compresses. The trading range is getting narrower and narrower as you approach the apex of the pattern. Now, the thing to understand about triangles is that they're known or they're classified as continuation patterns. Well, continuation of what? Continuation of the trend. The trend, it's up. Okay, we haven't seen a lower low or a lower high yet, even though we sold off in the last couple of weeks. This low is notably higher than the February low. So you break above this upper horizontal trend line here of the triangle, look out above. I look for gold and mining stocks to benefit. And to try and capitalize on that, you have NUGT. I like to call it Nugget. It's the 2X daily gold miner index bull fund. So here you can also see the clean up trend, and also that pattern here is forming. Okay, you sold off hard from that March, that early March high, but you formed a higher low. So I don't think this one is ready to move yet. In fact, I'd like to see it go sideways a little bit longer. But you clear, this 320 line in Nugget, look out above. And then, of course, if you do see a breakdown in gold prices, if you do see an early resolution to this conflict, gold tends to like uncertainty, whether it's monetary uncertainty, we don't know what the central banks are doing type of uncertainty, whether it's geopolitical uncertainty. It is interesting, though, how gold and miners did so well before this conflict erupted almost as if the market was aware of it before, the public at large was. So if you want to make some downside bets on mining stocks, you do have Dust, the Bear 2X ETF fund. We've been channeling to the downside here. Okay. Channels are another type of continuation patterns. Makes sense, right? It's been continuing its bear trend, lower lows and lower highs. But tell you what, guys, gold and silver reverse hard from their highs. Be on the lookout for Dust to have a big move. Now, let's talk about the market that's on everyone's mind aside from AI. But like I said at the beginning, right? Energy and AI go hand in hand. Okay, they go hand in hand. How do you think we're going to power all these data centers? It's not just nuclear power. There's natural gas, there's traditional energy. There's tremendous energy needs. This goes beyond the geopolitical factors. This is something that we need to power the future. And so this is the Energy Select Sector ETF index, making higher highs and higher lows, absolutely erupted at the beginning of this year. We're talking, 20, 30% move at the index level. Okay, this is pretty big. And to trade that through ETFs, Direxion offers the Energy Bull 2X ETF, ERX. And you can see this fund doubling that move in the select sector index. Big breakout here. There was a big resistance zone. If you follow my laser here, in that $55 to $60 range, you broke above that at the beginning of the year. And now we're channeling higher. What is the channel to the upside? It's a continuation pattern, higher highs and higher lows. The trend is your friend. It is to the upside right now. And of course, on the bearish side of things, you get a resolution, things quiet down, you get a ceasefire for a few months. You have all these releases from the Strategic Petroleum Reserve. You have the Treasury Department shorting oil futures. It really is a crazy time to be trading these markets. But no matter what direction they go, bullish or bearish, there is a trade available. So, this one's been trending to the downside. No surprise here. Lower lows and lower highs. Energy's been bullish. The bears and energy, they've been punished. So it's not just the ETFs that you can trade or the sector wide. You can also look at individual stocks. And we have ExxonMobil, XOMX or XOMZ. XOMX is the Bull 2X ETF. For ExxonMobil, this is a blue chip energy company seeing tremendous gains, has had a huge move to start the year. And in this case, you got the uptrend, you broke above resistance, that's now support. And what are you doing now? You're forming a symmetrical triangle pattern. This belongs to that family of triangles. Not all that different from the ascending triangle, which we already discussed. This is a symmetrical one. The only difference is that you have a downward sloping upper trend line. So you're coiling, you're getting close to the apex of the pattern. This implies, okay, again, you haven't broken above it yet, but it does imply that ExxonMobil could see more upside. And even if, the price of crude oil comes down, I want to remind everyone, the price of oil, okay, is at a very healthy level for oil producers around the world. They're making money. They're printing money in this environment. Even if oil comes back down to $70, $75 a barrel, these companies, they have healthy margins. They're looking good. So don't sleep on the energy sector, whether it's, ERX on the bull side or ExxonMobil for individual stock opportunities. So let's pivot and go back to look at some individual AI names. I know we're seeing some downside today. All of these charts are as of yesterday's close. But, NVIDIA topped out in late October like the NASDAQ did, but, it's been holding a lot of support. So if you think that this is a dip buying opportunity environment, you got a little bit of downside in NVIDIA today. You had that post-earnings fallout. You sold off for a couple of days, but stock snapped right back higher. You had technical support, 170, 172. You can see how this area has held. There's clearly a lot of demand for NVIDIA, in that 170, 172 area. And what you actually have forming here is a descending triangle. So we're rounding out the triangle family here. You have the ascending, the symmetrical, and the descending one. And so, that that pre-earnings high created that downward sloping upper trend line. You can see a lot of support here. Perhaps an opportunity here to buy the dip if this AI trade is going to stay alive and well. We know NVIDIA is at the center of it all. If you're looking to hedge, if you have a big position in NVIDIA, and you're worried about the support zone breaking, NVDD is a way to go about that. Palantir in the news today. Last I checked, it was still up. I haven't looked at it in the last few minutes here, but this is actually an example of what I would like to call a false breakdown. So you actually had a head and shoulders pattern. Okay, you broke the neckline here as support, but the stock got bought back right higher. Now, obviously, Palantir has a lot to do, with military stuff, military contracts. They're kind of on the ins, with the government and AI. It really is an all-encompassing pattern or company, excuse me. So above 150, I like Palantir. This could have been a false breakdown, and I will say this: remember this phrase, "From false moves come fast moves." This could be one of the sleepers in the market right now, in light of everything that's going on right now. And then a couple other AI stocks, Advanced Micro Devices. You can see how it's kind of hugging the support zone here. $190, $200 per share, forming a rectangle pattern. So in these rectangles, a lot of times what you look to do is you look to buy support, which is the lower horizontal trend line, and you like to sell resistance, the upper horizontal trend line. However, these rectangles, they tend to eventually resolve as continuation patterns, not all that different from triangles. So you break above, 260, 265, look out above. Basically what I'm saying is there's a pathway for this AI theme to continue based on the patterns, based on the trends we're looking at. So we're at support here, AMUU, 2X bull ETF. This breaks down, you lose this support. AMDD, whether you are looking for a hedge in Advanced Micro Devices, I do own this stock myself, but I do, we break out below these lows, you break down. I'm either going to be hedging with AMDD or stepping aside completely. Oracle, okay, they had earnings a couple days ago, showed the AI trade was alive and well, but here's the catch, guys: lower lows and lower highs. This stock really has been struggling. And I'd be more interested in Oracle. You get back above 200, take out this high from January. I think it'd start to look a lot better from there. So, if this was the low, ORCU, orcs makes me think of Lord of the Rings. If the orcs are storming the Oracle Palace, you're going to want to buy the orcs ETF for more downside. And then last but not least, you got Tesla here also holding support. Does this play out like what we saw in Palantir, or are we getting a false breakdown? Remember, these head and shoulders formations, you have to break below the neckline, because the dirty little secret about head and shoulders formations is that if you don't break below the neckline, they actually can resolve as continuation patterns versus reversal patterns. So Tesla feeling a little bit of heat today, but we did bounce off of that neckline and support. So I know I threw a lot at you, but we're running out of time here. We got a couple minutes to go before we wrap it up. Just to summarize everything that Sean and myself said, leverage can be very rewarding or very cruel. You cannot afford to stay wrong for long. You need to know your risk, know your time horizon, know your plan. Are you a swing trader? Are you a day trader? What's your entry? What's your stop? What's your price target? All planned out before you even hit the buy button. Okay. So very important. Also, look into trade sizing. Cut losses short. Let your winners run. The way I trade, my break-even rate, 25%. If I'm right 1 out of 4 times, I don't lose money. That's good enough for me. Look into the math behind that. It's going to save you a lot of time and a lot of money. So if you want to stay connected, you can find me on Twitter. I'm always going to call it that, Gianni_Depoce. But let's see if we have, do we have any time for any questions here? We did have an action-packed hour here. So let's see what's going on. We got any questions? I don't see any right now. Let's see. Yeah. Okay, guys. Well, Sean, I think that's going to wrap it up. Thanks for explaining how these bull and bear ETFs work. Direxion, great suite of products. Let's see what happens in this market. Bull, bear, mix, somewhere in between. I saw someone call it market. I don't know. Can you come up with a kangaroo ETF too?
Probably. but no, awesome. Thank you again for having me, Gianni. Again, for the traders that are out there, go to our website, direxion.com. If you're curious and want to learn a little bit more about our product suite and some education around leverage and inverse ETFs.
Awesome. Thanks, Sean. See you next time.
See you.
All right, everyone, that's going to do it for today. Thank you for joining me here at Benzinga, where we talked about the hottest sectors retail investors are watching right now. We looked at AI, we looked at energy, a lot of other big movers in the market right now. So stay nimble, guys. This could be a big opportunity setting up in the market right now. You have some tools at your disposal. Go out and get them. I'll see you next time. Thanks again, everyone.